Good morning. If we can display the presentation, I'll get started. So on the screen here, what you can see is the La Paria mine and the plant here. This is a 2,000 ton per day plant. It's 1,000 tons per day on the oxide circuit and 1,000 tons per day on the leach circuit. This was the first mine that First Majestic had in Mexico, and it was a starter mine for them. It was very profitable, and it fulfilled their goal of providing the cash flow necessary to buy a number of other mines from which they were able to grow into what you see today, a $2.5 billion company that's now moved on into gold production. So this property would produce on average between 3 and 3.5 million ounces of silver for them per year. And while that is too small for First Majestic, it's fantastic for us, and puts us in line to be a silver producer within the next 18 to 24 months. On the slides here, you can see that we are purchasing this project for $20 million in equity, and the balance of the payments are structured around some future payments that total $13.5 million and would be paid upon certain exploration successes that we would project to have in the future. Concurrent with the acquisition, we have to close a $9 million financing, and this financing is in Canadian dollars, with First Majestic participating for $2.7 million US dollars. There's excellent infrastructure in place, as you can see from the earlier picture, with a fantastic mill. It's maintained very well. First Majestic turns the mill on every month, and very modest restart capital to get us to that 3 to 3.5 million ounces of production. Great location. It's very close to Durango City. In fact, it's the closest mine to Durango City, and so very good logistics for us. There are 22 million ounces of silver on the books, based on First Majestic's last disclosure on the project. In addition to that infrastructure that you saw, which we peg at replacement value today of over $150 million, there's also a surface stockpiles that at today's metal prices would be another $35 million of value. So very good value for us. And then finally, with the $9 million equity raise, we will be doing some drilling going forward here. We'll be drilling known resources to increase the confidence and support the restart plan. We would also be doing some near mine and in mine drilling to expand the resource. And then also we'll be initiating all the technical studies that will support the restart plan. This slide gives a little bit more details on the deal. Customary conditions, regulatory approvals. Shareholders have already signed voting and support agreements for 25% of the stock. First Majestic will, I'll come back to this slide. First Majestic will initially hold 40% of the pro forma company. This capital structure that you see is a fully funded post-transaction, post-financing capital structure. And First Majestic will initially own 40%. And then at next year's First Majestic shareholder meeting, they will approve a dividending down of the balance of the shares such that they will own 19.9% of the company. We expect to close in the first half of 2023, targeting May. And we will also be initiating some rebranding to, more particularly showcase our silver endowment. On this slide now You can see the La Paria resource, 22 million ounces, and on the further right in the dark blue, you can see the San Diego resource, which is our current project, 210 million ounces of silver equivalent. This is the management and board. Just going back to our location and the logistics to travel to site. There are daily connections through Mexico City and Dallas, Texas to Durango City. And then once you're in Durango, you're 45 minutes to La Paria on nice paved highways, better than the 401 here in Toronto. And 1.5 hours the other way to our current asset, San Diego. Durango, as many of you will know, is a very good mining jurisdiction. There's 23 operating mines in production in Durango. They've been mining in Durango for almost 500 years, and you know, a lot of good in-country and local support for the mining industry. On this slide, you can see where our the mines are located. The main mines that we will be focusing on as part of the restart will be Rosario, San Marcos, and Quebradillas, and they're located right around kind of like a shoehorn kind of structure here with this granite intrusion in the middle. And you can see the underground mines, the development. There's a development level here on the 11th level. This is what First Majestic was doing in the last couple years before they shut it down. They were putting in a central haulage facility to streamline costs. They had completed that project by about 60%. And what it was meant to do is haul all the ore from underground to a central hoisting shaft right under the plant. And so that will be part of the technical studies that we will review as we move forward towards restarting the project. We mentioned that all the infrastructure that's on site, and our view that the replacement value of this infrastructure today to do this plant and all the development would be over $150 million US, and we're buying it for 20. So it's a very good deal for shareholders. This, you know, very important is the tailings capacity. There's 9 years of tailing capacity. Gold standard tailings, dry stack tailings, and most projects you see don't have this, but it's now the standard in the mining industry, as you know. Oh, there's another point I should mention. Half of the plant, so 1,000 tons per day in sulfide circuit and 1,000 tons per day in the oxide leach circuit. On the back end of the oxide circuit is a Merrill-Crowe system which produces doré bars. So we're able to improve our margins by about 10% on that side. This slide is in the presentation just to show that our target of producing 3 to 3.5 million ounces per year is easily achievable. They achieve this quite regularly on the First Majestic side, and we will be able to do that as well. Importantly, production is 67% silver. So we have a very high silver ratio in our production, and then the byproducts are split about 50-50 between lead and zinc. This slide shows the profitability that I was talking about previously. Total cash cost net of byproduct credits averaged $846 over the time period, and you know, we'll be able to comfortably operate in this, you know, $11 range. Again, a little bit more detail on the mines. Let's look at the resource. 22 million ounces if you tie them together, and these are the 3 mining areas that we'll be focused on in our restart. One of the additional benefits of the transaction is that there are $35 million or so in these stockpiles. This stockpile here is about 3 years of feed. It's grades about 60 to 65 grams per ton, so we would be blending that with other run-of-mine ore. On this side, there's a high-grade stockpile. This is about a month and a half of feed, and the grade of this is about 500 silver equivalent grade for this higher grade stockpile here. This slide shows the land package. This bottom area has not even had any drilling. The mine is just located up right here. And then I'll show you another slide in a moment where there was a discovery. After First Majestic put the properties on care and maintenance in 2019, they did some drilling in 2020 and made a discovery, very much like what they were mining at the mines. So it's the extension of Rosario. So you can see the little bit of a breakdown of the drilling that we're going to do. We're targeting 7,000 meters of drilling over this next period once we close. And then we'll follow that up with another 10,000 meter program to continue exploration. The next few slides just shows a little bit of the areas where where they mined and where they left it. You can see that it's open along strike and open at depth. They mined on Rosario's 1,400 meter extension, and they mined down to about 700 meters. And we'll be able to mine down another at least 700 meters, and then it's open on strike, as I mentioned. This slide also shows that just off where they're mining, there's additional drill hole intercepts, very similar to what they were mining, 220 plus grams over 26 meters. And here we have one at almost 16 meters over 200 grams. So very good stuff, run of mine, ore and grades. This slide shows another mining area on Rosario. So you can see this last level that they were opening up, and the channel sampling in that area, high grade stuff. And if you just go off just over here 100 plus meters, they're hitting the same thing. 6 meters of 265 grams. And then if you trace that back up, you can see that another intersection here, 220 grams over 25 meters. So this whole area should populate with further drilling. Same story on Quebradillas Underground, open at depth and along strike, and more drilling supports that. And a little bit higher grades, over 400 grams, which is really good material to be blending in with the rest of the mines. Over here, we believe we have what will project to be another open pit. You can see the drill hole right underneath this area right here, and a cross-cutting vein. So we expect that there's another open pit area right here. Similar story, open at depth and along strike. You can see more good drill hole intercepts, and we will continue the development and the production from these areas in San Marcos as well. Our Genesis is the discovery I was talking about. It's 750 meters away from Rosario's, and very good grades. Okay, almost 400 grams, over 200 grams in this one. And this area, we can just chase the vein all the way across. That supports several years of mining if this populates, and we think it will, based on the geology. A little bit of information about our current asset, over 210 million ounces of silver equivalent. You can see the 2020 geological model when we took over the company. And on the right, some of the highlights from our drill programs, hole 2157, cut in between this target area for the 1849 zone. And we've now been able to populate another 500 meter extension of mineralization. Up here at the top of hole 2157, we've hit what looks like an open pit area when we combine this intersection with 4 or 5 of the other drill holes from the database. So this would be a game changer for this deposit in that we'll be able to pay for the economics of getting down to this richer zone. Couple potential synergies. These oxide veins are potential. There's 4 million ounces in the green circled. We will be looking at, in those technical trade-off studies, of trucking some of this ore over to La Paria and producing it in the plant at La Paria. So it looks like I'm out of time. So that's the story. A very good acquisition for us, excellent value, a plant, and a strong resource for $20 million essentially in equity. And we'll be doing a $9 million Canadian dollar raise, and First Majestic will be participating for 2.7 US in that. I'll stop there and take any questions.